Welcome to another XLM price action update. So in this video, we're going to talk about the recent price action after it basically made a new low as basically I predicted in the previous XLM video. So it's been a while since I've posted it simply because, posted about it simply because it's taken a while for this week wave C to occur. Now, at this point, it's pretty obvious to see that the pattern itself didn't hit the expected target. So we can only assume that wave C was shorter at this point. I don't see any value in assuming that we're still in some kind of a corrective pattern that will bring price down to the green line as predicted in the previous video. But it did reach the minimum expectation for the move, right? And that was, if you remember me quoting, I'll quote myself actually, that we need to see price make a new low below the previous waves of the B wave, right? So the whole thing is a B wave, right? But what I mean by B wave is this B wave up here in brackets. So wave A ended back here in June, mid June, and then we had this A, B, C, D, E pattern, right? And I said quite clearly, you can go back and have a look. I'll link it down below. That we need at a minimum, we need to see price dip below any of the previous waves that occurred, right? In this B wave, right? So obviously the C wave, we could say it ended up here of the B wave, and it happened. It dipped very briefly. Joshua, one of my members, sent me a message, and he basically said it tapped the 0.098, and then it was off to the races. So in this type of scenario, because it's a minimum expectation, and it did perform that kind of price action, to me, this looks like we're in a wave C now, right? A wave C of the larger wave 2 correction. So if I zoom out to the 4-hour chart, right, you're looking for wave 2. Okay, so wave 1 was the wave down since May 2021, as I've explained before. Okay, it's a kind of like a leading pattern. It's the only kind of explanation that this pattern can give. But then following on from that, it's also what came after that that is also a quite a bit of evidence is that it didn't bounce after this 5-wave move down. So understanding that this pattern since May 2021 is a 5-wave move helps you anticipate what comes next, and that's the whole point of uh, you know how I analyze the market, so to speak, right? Which is not Elliott wave, by the way, just in case you're wondering and you haven't seen my videos before. So with this basically process of elimination, you can quite easily see that what happened after that 5-wave move was an A, and then we had a B, which very weak on the waves seen in brackets was very weak, right? And now we're bouncing in a wave C. So just like fractally, you have A, B, C, D, E within a B wave. Well, within a wave 2, you also have A, B, C, D, E. So, which is why I've left these markings on basically since the previous video, um, just to illustrate that we are looking for a CDE pattern, right? Now, in terms of the size of that pattern, now that's very dependent on a couple of things. So, for starters, this if this is the start of a wave C, how large will the wave C be, right? Or could it be part of a CDE pattern? Okay, so the only way that we're going to be able to know this is firstly after we see this first 5-wave move at the lows bounce. Right, I'll just go zoom in. I'll zoom in on this so we can have a quick look. So obviously this looks impulsive enough to be considered part of a C wave. Now, we've seen a 1, 2, 3. To me, it looks like we're just in a potentially in a wave 4 of a 5 wave move. Now, it's my understanding that we're heading toward basically some pretty big volatility coming soon, and obviously with the midterm elections coming up, and um, the end of the year, that sort of thing, and also continued uh, raising of rates and Fed tightening. It's becoming increasingly concerning for people in general. Uh, Uncertainty is definitely in the air when it comes to risk on assets. Therefore, one can only presume that the next month, 2 months, 3 months is going to be, fairly turbulent and choppy. Okay, so do I think that wave two will end, you know, by the end of the year? Something tells me that it may not. Okay, it may not unless this happens, and I'll explain it to you right now. So I'll just get rid of that CDE pattern because it's pretty large, right? So if we had a small CDE pattern, right, the way that I'd see this potentially occurring, especially if there is volatility and we don't see a deep correction to the upside, because let's face it, since mid June, we haven't seen a large correction to the upside. We just haven't seen it. Okay, so to assume that this may do that, it's a bit hard at this point. But for this to expand to the downside, I think that there's a real chance that this could expand to the downside in terms of the corrective pattern. All right. Now, first we'd have to see the end of wave C. Okay, so I'll draw these out. So wave C would go so far because it, obviously can't go up forever without a pullback. So for it to maintain, you know, symmetry of a 5 wave move, we'd have to see the first 5 waves, right? But because of the timing of how this is all happening, right? To me, it's more of a case of, well, the D wave typically in volatile situations tends to get people thinking that the dominant trend is resuming, right? So what I mean by that is dominant trend at the moment is obviously to the downside. Okay. If you look at price, we are way down below all-time highs. Okay. So if you don't think the predominant trend is to the downside right now, then I don't know what type of signals or what kind of methodology you're using, but when price is doing this type of thing and you're underneath moving averages, well, in this case, a 1,000 period, which is a fairly, long length of time compared to what some people use, then to me, it's pretty obvious we are still in a downtrend. Okay. Now, sure, the S&P bounced quite high and it reversed, and I called that one in my market update also, which I will be producing shortly, is another market update. But in terms of what to expect next, if the dominant trend continues to, show its teeth, then after we see this wave C end, which at this point we don't know how far it will go, right? We will see a D wave begin. Okay. Now, if you have a look firstly at the first correction here, A wave was fairly shallow, right? It only bounced back up. Okay, it's ridiculous to say this, but it only bounced back up, 50%, right, in terms of price. But in terms of retracement of the overall down 5 wave move, it didn't even go anywhere near 0.382, right? Which is fair enough. That doesn't really mean anything. Wave two corrections typically do bounce at least a bit more than that, though. So, looking back at the first wave two of the first move down, you can see that it did bounce back to about 50%. So, that to me was, in line with a wave two correction. But I suppose being this kind of pattern where, um, you know, regardless of any, mania at the top or at the highs, the pattern still managed to trace out five wave moves, which definitely dampened spirits in the crypto world or in general. But also, if you're looking at this particular coin, it would have dampened your spirits pretty good. So, bear market rally, wave A, was fairly small, really, right? We had a B wave, which the C wave was fairly weak, right? So, what's going to happen is C wave will bounce up until a certain point, but then it'll probably flame out. I would say, who knows, it might even go up to, I don't know, maybe even retest that 1000 period moving average. Potentially, right? Just simply because why would this bounce so why would this bounce be so uh shallow if it's a wave C? Okay. So this whole thing could basically pivot around the whole move from now until the end of the year being just a wave C, right? And that's the thing that we don't really know. Okay, we don't really know how high this wave C could go. Is this wave C about to end, or is it only just the first wave of a five wave move, which will continue to move higher? Um, you know, in a relief rally, a bear market rally, or whatever you call it. How would you get into that trade? Okay, so that's definitely possible, especially if you pay attention to what's going on at the small degree down the bottom here, which I'll touch on in a sec, right? So, look, even though this could expand to the downside, the correction is not, it's nowhere near over yet for wave two, right? This one here. Okay, we don't know where that final wave E will end, right? For example, take a look at this correction down here for wave B in brackets, right? You can see A, B, C, D, E, and even E was like drawn out type of thing, right? And that same correction occurs in a wave two on a larger scale, which is what you're seeing now. It's all fractal, right? That's how fractal patterns work. You can predict them until a certain point, right? You can predict a zigzag to a certain point, but then you've got to take into consideration, well, wave C is a five wave move and typically pretty sharp. Retracements typically retrace back to at least the previous fourth wave, right? So the previous fourth wave is right up here at the magenta line. It's about, say, 24 cents, right? So what's going to be the catalyst for that potentially happening if if it did happen, if we did take that into consideration? What would be the catalyst? Well, volatility for sure. Um, what's coming, shortly for markets could definitely produce that. So before we even talk about D wave, which I don't even think we're going to get to in this video, simply because now we've gone down the potential C wave path, I'll leave that for another video. Let's just say this does bounce higher. Okay, so going down to the small degree here, we'd still have to wait for a wave 5. Okay, so let's just say we have wave 1 right here. Okay, so let's just make this white. You have wave 1, and then you have wave 2, right? Then you have something like a wave 3, potentially a 4 in progress, and then a 5. Okay, now let's just say that happened, right? In the meantime, okay. um, Maybe the midterm elections might create some volatility, which results in this, in a wave 2 occurring, right? So I probably labeled this wrong. Let me try that again. So one, so I, three I's, IV, and V. Okay, so let's just say this is a wave one, right? What if the volatility over the next, say, for example, month or month or two, right, results in a wave two? Okay. Well, there'd be a corrective pattern in there unless it was completely sharp and was a result of a news event. You'd probably get a pretty decent 0.618 retracement, right, to pull back in order to go long. Okay. If it's a wave two. Okay. Obviously, if it breaks any lower than that and it breaks through this support and it breaks down in what appears to be a straight 5 wave move, then one could assume that C wave was short and now D wave is, in progress, right? So that's how I'm looking at this, right? How do you know? How can you tell? Okay, so there's certain waves that I will look for in order to prepare myself to take that trade, in order to cover myself in case it's not what we think it is. Okay, now at this point, that's my first point of assessment here. Having not bounced yet to previous fourth wave is a bit of a weird thing, to be honest. It's definitely a bit of a weird thing for me. Um, just thinking about symmetrical patterns, what if we had like an inverse head and shoulders pattern with a D wave sort of happening and then an E wave that fails to be like it basically is like a failed breakout or something, and then it just reverses back down, right? That type of thing, right? We don't know. We don't know yet until basically we see more info. But at this point in time, there's no real big trend continuation just yet. We are still corrective. Now, we're short term, for a short term move, wave C is possible. But to be honest with you, these markets, they're not moving as fast these days. So just staying updated in terms of Arius wave, is something that it's going to happen gradually and slowly because, to be honest with you, the need for me to, like, I don't feel the need to constantly update when this type of thing is happening. Basically, range bound. There are obviously those small opportunities that you can take if you feel like it, but as long as you understand how and why, then obviously you won't be expecting to get too much out of it in case you think it's a reversal or whatever you think, whatever you're thinking it might be. Okay, so yeah, just I cautioned people in the last video about Elliott wave and thinking that it, there's a wedge pattern going on here and all this sort of stuff. Look, wedge patterns will get you into trouble time and time again if you use them, and especially if you think that Elliott wave is somehow magically linked with wedge patterns. Okay, you need to understand Elliott wave was created in the early 20th century when there was really no computers were not ubiquitous, and we didn't have this type of platform and the type of information and data that we have these days. So I'd be very careful with using very old methodologies. My methodology is, well, I can't, not allowed to talk about it, but basically it's modern, okay, and I can tell you from this analysis that we're going to be range bound for a while, okay. Whether that remains in this area here like this for a while, it's not going to do much more than that. So that's at least something that I'm fairly certain of, right? And that's my opinion. So obviously, we're all entitled to our opinions, but a lot of people get chewed up in these types of moves. So I just advise you to just be careful and just make your decisions wisely. So thank you for listening, and I'll catch you on the next one.